Welcome to the Premia TNC YouTube channel. Navigating tax regulations can be challenging due to complex tax laws, unique financial circumstances, and the need for legal compliance. Whether you're aiming to maximize benefits, stay updated with changing tax laws, avoid common pitfalls, or simply achieve peace of mind, understanding the tax payment process is crucial. In today's video, we will provide an overview of Hong Kong's personal tax system, commonly known as salary tax. Stay tuned as we break down these elements and offer practical tips to help you manage your tax obligations efficiently. Let's discuss the key aspects of Hong Kong's salary tax. 1. Territorial tax system. Hong Kong operates under a territorial tax system. This means that only income earned within Hong Kong is subject to tax. 2. Progressive tax rates. The tax rates are progressive. For income between 1 and 50,000 Hong Kong dollars, the rate is 2%. For income from 50,000 and 1 to 100,000 Hong Kong dollars, the rate is 6%. For income between 100,000 and 1 and 150,000 Hong Kong dollars, the rate is 10%. Income from 150,000 and 1 to 200,000 Hong Kong dollars is taxed at 14%, and any income over 200,000 Hong Kong dollars is taxed at 17%. 3. Deductions and allowances. You can claim standard deductions and allowances, including those for dependents and retirement contributions. 4. Tax filing. You need to file your annual tax returns with the Inland Revenue Department, or IRD. The tax year runs from April 1st to March 31st. 5. Employer reporting. Employers are responsible for reporting your income to the IRD. 6. E-filing. E-filing is encouraged. 7. Double taxation relief. Hong Kong has agreements with other countries to avoid double taxation on the same income. 8. Penalties. Failure to comply with tax obligations can result in penalties and fines. 9. Tax advisors. Consulting tax advisors can help optimize your tax position and ensure compliance with regulations. 10. Audit by IRD. The IRD may conduct audits to review the accuracy of your tax return. Discovering how to pay tax in Hong Kong. Here's how to pay tax in Hong Kong while ensuring a safe and convenient tax payment process. Hong Kong offers several electronic payment options. You can settle your tax dues, business registration fees, stamp duty, or purchase tax reserve certificates, TRCs, using telephone, internet, or bank automatic teller machine, ATM, services. Here are the key points to note for electronic payments. Firstly, payment by telephone. Utilize PPS, payment by phone service, for round-the-clock bill payments through phones, internet, or the mobile app PPS on mobile. Secondly, payment via internet. Make payments via the internet through various platforms, including PPS, eCheck/eCashier order, and the faster payment system. Thirdly, payment via ATM. Pay conveniently at HSBC, Hang Seng Bank, or JETCO ATM networks. Simply bring your bill or account number to an ATM with bill payment signage or the Jet Pay Memento logo and select the bill payment function. Next, important notes for electronic payments. When using the faster payment system to pay your IRD bill, scan the FVS QR code on the bill for payment. For telephone, internet, or bank ATM payments, use the Schroff account number for electronic payments or the 11-digit Schroff account number from the tax demand note. For business registration fee payments, input the 16-digit business registration certificate number. When purchasing tax reserve certificates, TRCs, use the 13-digit TRC account number. For stamp duty and court fee payments via eCheck or eCashier, input the respective charge number. E-receipts are issued through ETX accounts for electronic tax payments and TRC purchases. Paper receipts are not provided. Be aware of the daily transaction cutoff times set by payment service providers. Payments made before these cutoff times will be considered and received on the same day. The daily transaction limit varies depending on your payment method. Ensure the full amount is paid by the due date, even if you need to split payments over multiple days. By following these guidelines, you can conveniently and securely manage your tax payments in Hong Kong. How frequently must I submit my income reports to the Inland Revenue Department? In Hong Kong, salary tax follows an annual assessment cycle from April 1st to March 31st. Taxpayers typically file annual tax returns. Those with income below the allowance threshold are exempt unless they receive a return from the Hong Kong Inland Revenue Department. Provisional salary tax may apply. For those who started working before April 1, 2022, reporting income is divided into specific assessment years. Taxpayers usually have 1 month to file returns, and non-compliance with tax laws can result in penalties. As a first-time taxpayer, when can I expect to receive a tax return from the IRD? Typically, tax returns, the IR60, are sent to regular taxpayers in early May each year. However, for first-time taxpayers, there's no fixed date due to file creation time. Generally, first-time taxpayer tax returns are issued within 5 months after. Your employer notifies the IRD of your new employment using Form IR56E, or you notify the Commissioner of your salary's tax liability. Occasionally, first-time taxpayers may receive a BIR60C instead of a BIR60. Must I keep records of my income and eligible expenses for taxation? Yes, it's recommended. Salaries tax assessments rely on this information. Keep records to support objections against overassessment and provide receipts for expense claims like donations and subscriptions. Failure to produce receipts can lead to claim rejection or deduction withdrawal. Keep receipts for 6 years after the tax year, as they may be needed for reviews. For first-time taxpayers, understanding the timeline for receiving your tax return and the importance of accurate record keeping is crucial. Typically, tax returns are issued within 5 months after the IRD is notified of your new employment or your tax liability. Maintaining thorough records supports accurate tax assessments and helps in managing claims and objections. Premia TNC provides comprehensive tax services to streamline this process, including completing and filing tax returns, ensuring timely and accurate submission of individual income tax returns. Tax computations. Preparing and submitting detailed tax computations with supporting schedules. Offshore income claims. Handling claims related to offshore income. IRD communication. Facilitating effective communication with the IRD on tax assessments, objections, and correspondence. Our expertise ensures that your tax affairs are managed efficiently and professionally, allowing you to focus on other priorities.